Good morning. It is Thursday, March 26, 2026. This is your Deep Dive Daily Briefing. I am your anchor, Cora, delivering a comprehensive analysis of the pivotal events that have defined the last 24 hours. We begin our broadcast with a critical development on the world stage, where the strategic landscape of the Middle East hangs in a delicate balance. The 5-day military reprieve announced by the United States earlier this week is entering its final 48 hours. And diplomatic efforts to secure a permanent ceasefire have reached a fever pitch. In Geneva, high-level representatives from the United States, Israel, and the new Iranian leadership are engaged in marathon sessions aimed at establishing a maritime security corridor. While President Trump has alluded to a very big present regarding energy trade from Tehran, the Iranian Revolutionary Guard remains a wild card, having recently conducted localized naval drills near the Strait of Hormuz. International monitors warn that without a formal treaty by the weekend, the risk of a full-scale regional conflagration remains extremely high, especially as humanitarian groups report that the number of displaced persons across the Levant has now surpassed 1 million.
Transitioning from the front lines of conflict to the broader global economy, the narrative is being driven by the much-anticipated release of the OECD Interim Economic Outlook. According to the report released in Paris, 11 a.m. Central European Time, the organization has slightly adjusted its global growth projection for 2026 to 3.2%, a marginal decrease from earlier estimates. The OECD highlights that while the immediate shock to energy prices has moderated, the persistent fragmentation of global trade remains a significant structural headwind. Of particular concern is the divergence between advanced economies. While the United States remains resilient due to domestic energy independence and the artificial intelligence boom, the Eurozone is struggling with stagnant industrial production. This economic divide is expected to widen if the temporary pause in Middle Eastern hostilities does not transition into a long-term stabilization of global energy supply chains.
In the realm of finance, all eyes are on the bond market as it processes a historic surge in sovereign debt levels. Global debt has now surpassed $315 trillion, representing over 330% of world GDP, a figure that is causing significant anxiety among institutional investors. This mounting debt burden is being exacerbated by the dual pressures of increased defense spending and the massive capital requirements of the AI transition. On Wall Street, financial strategists are closely monitoring the yield curve, as the 10-year Treasury note remains elevated despite the Federal Reserve's recent hawkish hold. The financial sector is also bracing for the impending leadership change at the central bank this May, with market participants seeking clarity on how the new administration will manage the balance between controlling sticky inflation and ensuring that the high cost of borrowing does not trigger a deep contraction in the real economy.
Turning our attention to the technology sector, the focus remains on the rapid build-out of artificial intelligence infrastructure following the landmark GTC 2026 conference. Leading hyperscalers, including Amazon Web Services and Microsoft Azure, have confirmed they are significantly increasing their orders for the new Blackwell Ultra architecture to meet the surging demand for autonomous agents. Simultaneously, a new front has opened in the global chip war, as the United States Department of Commerce has reportedly begun investigating several third-party distributors for potential violations of export controls on advanced AI hardware. These geopolitical constraints are forcing technology firms to accelerate the development of specialized, low-power chips that can operate at the edge, reducing reliance on centralized data centers that are currently facing a global power ceiling of 92 gigawatts. This shift toward edge AI is seen as a vital strategic move to maintain technological momentum amidst an increasingly contested global environment.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce, which are currently facing a period of intense structural rewiring. The de facto closure of the Strait of Hormuz has forced every major ocean carrier, including Maersk and MSC, to maintain the Cape of Good Hope as their primary route between Asia and Europe. This detour has not only added up to 14 days to voyage times, but has also created a critical shortage of empty containers at major Asian export hubs. Logistics analysts at Zenita report that air freight spot rates for critical components have jumped by over 45% in the last month as shippers scramble to avoid maritime delays. As a result, 72% of trade professionals have now prioritized the adoption of AI-driven adaptive networks, moving away from just-in-time models toward a just-in-case strategy that prioritizes regional inventory buffers and multimodal transport corridors to bypass volatile choke points. That concludes our global briefing for today. Thank you for joining us. I am Vivian.